Bloomberg Audio Studios. Podcasts, radio, news.
It's been an interesting week in the UK when it comes to markets, Allegra, because there's a bit of a respite probably from the Chancellor Wednesday, today, the day we're recording the podcast, because of the inflation numbers. But otherwise, she's really had to say, look, the bond yield moves are okay. I'm sticking to my targets.
And it's brought back uncomfortable memories of crisis in deep history, but also more recent history, with the Liz Truss terrible September of a couple of years ago, which of course we are not there, and it would be wrong for us to be saying we were there. But it has allowed the commentariat, who are not those that aren't on her side, to get the lettuce metaphor out of the deep freeze, etc. So she was in Parliament yesterday, the Commons. She came to address MPs ostensibly about her China trip, which also, by the way, was not an amazing trip, where she didn't get very much from the Chinese. And also she had odd language in framing that trip. So it was a bit of a sort of misstep by her, that trip. But nonetheless, she came to the Commons to talk about the success or not of it. And mostly it became about her defending her position. The central question, which we'll go on to talk about later, is this headroom question. We can debate for ages whether or not this is as big a crisis as in years ago, etc. But fundamentally, if her own numbers disappear on her, then she has to revisit her budget book. Yeah,
I think the concern is that there has, I think undeniably, right, certainly this week, the UK paid the most in decades to sell the 30-year inflation-linked debt. So this is market pain. But she herself was saying, look, this is not really their fault, and it's not huge moves. And so she also defended her record in Parliament. Here she is.
There's been a global volatility in markets. I don't believe that it is reasonable to suggest that the reason why bond yields in the United States, in Germany and France have risen is because of decisions made by this government. I think the honourable member opposite should just get real.
Welcome to the City of London.
The City of London.
The next station is Bank. Please mind the gap between the train and the platform.
The financial heart of the country.
The City.
Welcome to In the City.
Stand clear of the doors, please.
So this week we take a temperature check on global markets and, of course, get debriefed on Rachel Reeves' response to the recent sell-off of UK assets. With us, Jim O'Neill, member of the UK House of Lords, former chairman at Goldman Sachs Asset Management. Jim, thank you so much for joining us. I mean, the Chancellor and the Prime Minister, frankly, have had a terrible 2 weeks because of market turmoil. I know you've pushed back against this being real market turmoil, and you've insinuated that the markets are just making too much of a storm. Do you still think that's the case?
Well, I don't think they're making too much of a storm in a global context. I'm still a bit baffled about it days later that the UK mainstream media is sort of obsessed about this notion of some UK financial market crisis, which, unless I'm getting so old in the teeth, for my 40-odd years of experience, it's just not accurate. Yes, there is a premium to UK gilts that has built really over the years, frankly. But it's become bigger since the budget, but it's small. And most importantly, kind of factually, that this idea that the pound being weak is effectively incorrect. Yes, the pound is down against the dollar, but you tell me a currency on the planet that's not. I can see the sort of sporting fun of the whole focus of the media on it, but what's really going on is some kind of resurgence of the bond market vigilantes, particularly in the United States, and the fallout is bigger. Surprise, surprise, to take a Mark Carney phrase, those countries that are dependent on the kindness of strangers are going to be under the focus.
I don't think you can blame it on the mainstream media in the UK. I mean, you speak to traders and they think, look, there's been so much volatility. Now, this was maybe started in the US, but it feels like the UK has now become the epicenter for concerns about growth and inflation, and also the Chancellor's budget, basically, and whether she can stick to what she said so far.
It's fascinating, Fran, because obviously what you do in your day job, you kind of constantly in the middle of all this, but That sounds to me like a lot of traders who've never had a decent past in the macro world. I mean, the volatility that's taken place in financial markets this year so far is nothing. It's nothing. I mean, go back to the glory days where unless you had a move, within a morning or afternoon, then it was like nothing going on. So it's kind of all a bit mad. And as I say, if you really look at it closely, what has happened is there's been a slight further rise in the UK premium to some other fixed income markets, and the UK equity market has continued to underperform. But that was kind of going on anyhow. And of course, we've had until, ironically, the day we're having this chat, where the inflation news is surprisingly good, we haven't really had any real news. What has happened is we had a whole load of retailers reporting after their Christmas results, and their share prices got whacked. And it's adding to this mood of business that the budget has really caused this kind of quite notable rise in business optimism when the Labour government was elected has just vanished, and now everybody's full of doom and gloom. That is the case, but I wouldn't personally, which is worthy of some big discussion, but this idea that there's been some kind of UK mini financial market crisis is just, frankly, it's people that haven't been around very long. There's no evidence to support it.
Jim, just the fundamental question for Rachel Reeves will be this question of headroom, and that in the budget she left herself, to the surprise of quite a few people, not a huge amount, sort of 10 or 11 billion. So I think the question is, do you think that some of the activity that you've just lucidly outlined, do you think that it will remove some of that headroom, or do you think that by the time of the OBR coming back to everybody at the end of March, the problem will have gone away and she'll still have that buffer?
I just listened to Mel Stryle earlier today, and I know Mel reasonably well, and he's quite a sensible guy, but playing fun and sport of politics. But can you imagine that if she would have not gone to China and announced some mini budget, what would happen if then?
No, that's totally right.
Yeah, we get to 2 weeks' time from now. Trump has started, and it turns out he's not going to do any of the things people have been worrying about, and US bond yields drop 40 basis points. Is she supposed to have then another mini budget to actually announce some stimulus? I mean, it's just kind of bonkers. So that the first thing she should do is make sure that her links with the Bank of England money markets people and her own Treasury staff are really informing her of the real story as to whether there's anything going on or not about the UK. And then secondly, she will have to think that if bond yields stay where they are, come the OBR forecast, then what is she going to do? Now, going to your question, what it highlights, and why I've said to some others I've chatted to about it, I describe it as 80% global issue, 20% UK. The way she implemented her budget, in particular, and I've been quite public about this, the big increase in day-to-day NHS spending and a significant increase in education building spend has effectively left her virtually no wiggle room. And that is indeed being highlighted. And actually, I think, as somebody who was, as you probably know, quite a voice in trying to persuade her to change her fiscal rules on the investment side, I think it's a good warning, because I don't think they should have done that. And now that means they haven't got a lot of headroom. And if bond yields keep rising, yes, of course, they're going to have to probably cut spending.
So that you don't think they should have done the massive increase in NHS spending?
No, I don't. And it's fascinating, if you go back to the budget day, and I'm not in the markets regularly, so it was kind of a bit weird in a way, if I go in. But because of the fiscal rule changes that I knew were coming, I watched the gilt market throughout the speech. And for the first 3 quarters of it, the gilt market actually loved it. And it was only when the NHS spend bit came out, and then when everybody got access to the OBR stuff, where the sell-off actually started. And I think that's quite rational, because she should have really concentrated on the framework, and especially in circumstances where West Streeting wasn't really asking for a lot of money, because in fact quite a few times said there'd be no money without reform. the markets are right to be sceptical as to whether what might be actually a lot of money that is needed in the NHS, but the idea that it would be done productively and not wasted is right to be sceptical about.
But Jim, I understand the fact that you don't want to be alarmist, right? And maybe the move in sterling.
If I see reasons to be alarmist, I will be.
Of course, but if you look at, the burden of rising yields, it means that government's fiscal operations are under pressure. And if you look at yields, I'm looking at levels. Again, the longer dated yields spiked to the highest level since the late 2000s. If you look at the 30-year yield, it was since 1998. The others by a similar time frame. So if this doesn't settle with the amount of issuance the government will have to do, it's a problem for the UK given the razor-thin kind of space that she's given herself.
Well, I've just said that. She has. There's no two ways about that. If the bond market, if we are entering a bear market in global bonds, she has an issue with her fiscal framework. There is no two ways about that.
You're right, Jim, that there's a lot of hysteria is probably the sort of fairest word to use. But I think for me, what her misstep was not just the headroom being so slight as we've all been discussing, but also the timing, because what was that budget? It was 7 or 8 days before an election where at the time, it wasn't a surprise that Donald Trump got elected, and it isn't a surprise that he's going to go, full speed ahead on tariffs. There is obviously clearly a debate about the extent and the magnitude of them. But I just didn't understand why, the Washington embassy would have been saying to her and her team, there's an election quite soon, give yourself more space. And I don't really want to get us back to the headroom discussion because you've been perfectly clear that she's left herself too little. But it's more, things have changed on her very quickly, some of which she could have predicted.
I think they should have just announced the new framework and left it at that. Because I don't think you can really judge what they're trying to do until we get beyond the spending review, and in particular, the rollout of the infrastructure and investment strategy. That gives the potential, in my judgment, for the first time in probably 25 years plus, for the UK to start to deal with some of the really big investment and productivity challenges. And that I am hugely impressed that she had the nerve, knowing that it's a week before Trump is being elected, to do that. And I think a number of other countries in the world should probably do something similar, because they're never otherwise going to get out of the growth trap. And if that strategy in the spring results in a number of investment things that the OBR is sufficiently impressed by that they revise up their long-term growth forecast, a lot of sell-side analysts will then also change their view. And a lot of the way people are talking about it all now will be just some brief period of madness in January. However,
why didn't the Chancellor announce it then? Because I agree, that's what I thought too. I thought it was missing.
So I'm not quite sure. I think there must have been some internal Labour Party politics as to why the big spending increase in day-to-day spending on health happened. I don't know. But I think she couldn't have announced any big investment things under the new framework because there wasn't any time for the OBR to have looked at it. In fact, the OBR said, linked to their forecasts, that they'd used, without getting too academic about it, the same multiplier across the board for everything because they hadn't had enough time to look at it. And when the whole point of this new framework is specific investments that are coming out will be looked at very specifically for their multiplier effect. And that is the central bit to what distinguishes what they're trying to do, I think, compared to what we've had under 15 years of the Tories. And by the way, like you probably, your own Pash, I tried to persuade various other chancellors we've had on the Tory side to do something like this, and they never wanted to. And I think that framework shift is really important. The problem is she's sort of created some doubts about it already. And the markets are rightly giving a bit of a premium to that. But, Fran, to come to your part of the question, if you're taking it back and all this reference to highs for, 20-odd years, the UK has made a series of harmful policy choices which warrant that premium. If you're not going to be part of the euro for all the reasons why we shouldn't, and then you're going to leave the EU, and you have a persistent current account deficit, surprise, surprise, you're going to have a premium relative to other markets in the world. It's not rocket science.
But Jim, it feels like, there's a lot of questions about what happens to Germany, what happens to France.
Yeah.
And you've been in the markets for long enough, especially, covering emerging markets, that you just don't want to be in the eye of the storm, whether it's rightly or wrongly. You don't want, markets overseas with traders that, may be young, may not be used to volatility, looking at your gilt market and saying, actually, maybe I want to be elsewhere. It's very easy to lose that narrative once it happens.
Of course it is. I have said to a couple of old pals of mine that it seems to me that on a broader scale than just the UK, but partly the UK, macro is back for the first time in 30 years. My glory days on the macro side were really before the euro existed, and we had the lira and the peseta and, endless currencies going crazy all the time. I cut my teeth on serious crises. And the key thing that goes to the core of your question is whether this is really the UK being picked on or just a load of people talking about it because they're in a 24/7 media environment and they have to find something to talk about. And once it starts, it develops a bit. But as of yet, there's no absolutely zero evidence that the pound is particularly being beaten up on. It's kind of mad. What we have is a sharply rising dollar on the back of a very large rise in a short space of time in US bond yields. And Allegra, going to what you raised about everybody knew this, that, and the other about Trump. Here's another thing which makes the macro thing so interesting but tough. I'm pretty sure that Donald Trump's and certainly his advisors aren't going to be too chuffed if US bond yields keep rising, because that causes massive problems for all his new mates in the world of tech. And so let's see, as we've had to deal with the unpredictability of Donald Trump all along, what is real and what turns out to be just a threat. Because if we keep seeing this rise in US bond yields, yes, it's going to be a huge problem for Rachel Reeves' fiscal framework. But guess what? The rising US bond yields in itself is going to be a much bigger problem for the whole of the world, the US and the UK included. That will be a crisis for a lot of things that have happened the past 15 years of zero rates.
How unfortunate is it that the Prime Minister lost his city minister to a scandal 6 months into the job where, that could have been a source with reform and regulation for financial services, could have been a source actually of growth and found revenue for the UK?
I've no idea, but, if that's going to happen, and again, I'll agree, you jump in, but if that is a serious thing for this Prime Minister, senior officials in the Treasury will be working on all that stuff, or will have done, and it will happen irrelevant of who's sitting in that seat.
Yeah, and I think a lot of Tulip Steve's agenda was actually notable, and lots of people in the city liked it because it was a continuation of a lot of what was done by the previous government just in that specific city brief. So as you say, Jim, it's
just bad press.
Yeah.
It just looks bad, right, from the outside world.
Yes, and it's not brilliant for a prime minister who said that he would move very quickly if he anybody in his government was accused of sleaze-like allegations, given he was so critical of the previous government for similar cases. But in the end, we're four and a bit years away from an election. So the central point here is if they can get that growth going, then a lot of this disappears as a political pressure.
I'm no political commentator or observer, but what it feels to me like a lot of people are commenting on these kind of things, thinking it's the same setup as the Tory governments that we've had since Brexit, which have been so fragile inside. So then the firing of the equivalent of a tulip or a resignation would have unpredictable stability consequences inside the government. But I mean, I might be, I'm probably quite wrong, but I doubt it's a big issue.
A couple of kind of quick fires are Rachel Reeves does have to at some point quite soon find defence spending increases. I think that is going to be difficult when, again, it was odd that it wasn't something that there was space for in the budget, given we know that Donald Trump, but also the person who's doing her own review, her party's own review, will be likely to say that they need to do increases.
Yeah, but Jim, I'm heading to Davos, and of course the beginning of the week will be completely sucked up by trying to understand Trump policies. Inauguration is next Monday. That's also the day that the World Economic Forum starts. I do love it. We're like on air, I think, 25 hours out of 24 with newsmakers. Jim, what are you expecting from the Trump presidency?
I'm trying to be very open-minded, but when I look at the cast of characters that seem to be influencing him, it is very hard to see how long some of these alliances around him are going to last, for a start. Very hard. Very hard. Secondly, even though it's sort of become fashionable in a lot of US business types I know, and a lot of people I've worked with, to now persuade themselves, because they want to be on the right side of Trump, that tariffs aren't that bad an idea and they might work. I mean, that's basically bonkers.
Jim, thank you.
Thank you.
Thanks for listening to this episode of In the City from Bloomberg. It was hosted by me, Francine Lacqua, with Allegra Stratton. It was produced by Summer Sadi and Moses Andam. Our executive producer is Brendan Francis Newman. Special thanks to Jim O'Neill. Please subscribe, rate, and review wherever you listen to podcasts.